Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Moynihan. In case you missed it, this past week we held the second annual Invest Conference where our amazing team interviewed executives from some of the world's largest corporations, thought leaders, and policymakers. But we're not just going to slap the episode online and call it a day. No. This is your investor guide for the end of 2024, looking to next year and beyond. For the latest half of this Investor Guide episode, we're focusing on high-level financial investments. First up, the economy. I'm excited to share a segment from my opening bid episode that we ran live from Invest. I spoke with Nuveen, Head of Equities and Fixed Income, and Chief Investment Officer Sarah Malik, as well as ADP Chief Economist and ESG Officer Neel Richardson. We all attempted to predict the unpredictable stock market. Take a listen.
I'm going to make a prediction.
Okay.
The economy will never be perfect.
Will never be perfect. Okay. I'm trying to be hopeful
You heard it here
I'm trying to be
first,
hopeful. Okay. I'm actually, that's going to be one of the headlines. It will not be perfect.
But there's going to be places of strength, and you have to look at those places. We've seen generative AI take over the consumer imagination, at least in my house, and stocks have rallied on that. If that's a place of strength, then you have at least a direction to watch going into next year. I've said that manufacturing has been weak. What role is manufacturing playing in your overall portfolio? Because you want a little bit of that. But how manufacturing fares in 2025 will be the test of policy. Because it was weak going into the pandemic. It's been weak coming out of the pandemic. It's critical in terms of American overall strength long term. If manufacturing turns around, then that would be a big game changer for the U.S. economy over the long term, not just the short term.
I'm going to make fun of myself here, Sarah. I hate when I ask, are we in a bubble? Because I sound like a clown. I'll ask you. I have no other way to ask it. I mean, are we seeing a bubble happen in markets based on assumptions to the economy that may not happen?
Well, first of all, I'm glad you're no longer asking me about cereal because you were making me you're making me hungry for
these prices are low.
For my favorite cereal, which was Fruit Loops, by the way,
Really?
when I was a
Fruit
kid. I love them.
That's a close second to mine.
I'm a rice chest guy. I'm a rice
What
chest
were you?
guy.
I was all for the sugar. If you look at valuations, we talked about this a little earlier. S&P at 22 times, go back a quarter century, you're going to find a higher valuation one time in March 2020 when it was 24 times. So the valuations, you might argue, were in a bubble. But there's a lot of differences from the late 90s to today. In the late 90s, I was a small cap growth portfolio manager, so I remember it well, almost have PTSD from it. Tech stocks were a lot different back then. They were unprofitable. They didn't really have a proper growth path. AI is here to stay. The mega cap 7 companies are obviously very profitable, strong growers, structural growth going forward. I don't think it's a tech bubble. Talking about other areas of the market that have worked in the last week, small caps, banks, crypto.
Banks have been on fire.
And, these are, again, none of these, looking at small caps and banks where, areas that we're invested, these are fundamentally strong companies. Small caps are still trading at about a 2-decade low versus large caps. So no way would you say those are expensive. And they have a lot of tailwinds now with lower taxes, lower interest rates, which is good for their debt burdens, and tariffs, which is better for domestically oriented companies, of which small caps have more of a domestic profile than large caps do. Banks, same thing. Easier regulations for banks should make banks stronger and have better growth going forward. So these areas that are on fire in the last week are certainly not in bubble territory. So barring valuations, and as I said earlier, bull markets don't die of old age, I don't think we are in bubble territory. I think this is a market that still in the near term has upside.
You can enjoy that full episode of Opening Bid at Invest on your favorite podcast platform or on yahoofinance.com. Next, we were blown away on new investing approaches in the world of private equity. Though often thought of as too risky to touch, Apollo Global Management co-founder and CEO Marc Rowan explained that modern investors are diversifying their portfolios, presenting some strong potential on future returns.
Are investors thinking about Apollo the wrong way? Look, Apollo is, of course, the parent company of Yahoo Finance. I mean, we always have known Apollo for big deals, but it sounds like you're about to unlock, or you have unlocked, a whole other growth mechanism inside the company.
This is about, so the answer is, I think investors have not thought much about Apollo, Blackstone, KKR, or anyone else in our industry. People are locked in a mindset of 40 years ago, which is private equity, as opposed to thinking about the industry as private assets. So think about the journey we've been on. 40 years ago, private was risky and public was safe. Private was 3 products: venture capital, private equity, and hedge funds, all 3 of which have risk, but used appropriately can offer good returns. And public was 8,000 companies, diversified portfolio of stocks and bonds. Okay, just a few years have passed. In fact, the entirety of my career. Is what we thought true? I don't think it's true. I think private is now safe and risky. Public is now safe and risky. But if you think about it, if something is risky and private, you stick it in a little bucket called alternatives. You watch that bucket really carefully. You demand really high rates of return. But if private is both risky and safe, maybe everything we've done from a portfolio allocation point of view before makes no sense. And that's actually what we're seeing happening in our business. The traditional role of privates in alternatives, private equity, venture capital, hedge funds, is there and growing. But the biggest trend in our industry is investors, individual investors and institutional investors, looking at their fixed income bucket and saying to themselves, why is this 100% public? Why don't I see whether I can earn some more excess return in public and private, and mixing alpha and beta? And the reason it's happening there first is investors don't need much of an education, because you have rating agencies who are capable of telling investors that something is of equivalent credit quality in the public market, equivalent credit quality in the private market. And this is what I expect to happen over the next 3 to 5 years. But make no mistake, it's not going to stop at fixed income. It's coming for equity as well. We will, as I've suggested, we will own, as investors, equity that is private rather than private equity. Because 8,000 public companies is now 4,000 public companies. More companies go private than come public. There is very little reason to want to be public other than for the largest market caps, given the
Who wants to do earnings calls, Marc? Nobody wants to do earnings calls.
Well, some of us like doing earnings calls.
You have to say that.
But it must be some bizarre personality defect that I like doing them.
And before we go to a short break, bonds, bonds, and bonds. BlackRock Chief Investment Officer of Global Fixed Income, Rick Rieder, talked with Yahoo Finance anchor Julie Hyman about the potential impact of geopolitics on the bond market. Check it out.
Okay, so if you talk about on the bond market side of things, if one risk is sort of a buyer strike, so to speak, what's the risk on the stock side? I mean, you mentioned geopolitical. Geopolitical hasn't made a dent in equities.
Pretty amazing.
In a long time.
Yeah.
So earnings continue to grow, revenue continues to grow.
Yeah.
You've got maybe better, fiscal policy that could be helpful for stocks.
Yeah.
What could go wrong then?
So can we go back to the debt discussion?
Sure.
So that's the one. Like if you said to me, like what keeps you up, I don't do a lot of sleeping, but what keeps me up at night, the first thing is, listen, you got to watch the geopolitical, keep an eye on it. Like you say, people tend, unless it is huge, people say, okay, I've seen this before. And by the way, I've lost more money hedging over my career for geopolitical. And unless it's something dramatic, it doesn't really influence. Listen, how we play out this quote unquote strategic decoupling with China is going to be significant. Are we going to tariff? And my sense is not. There won't be massive across-the-board tariffs. There'll be some form of bilateral negotiations. But tariffs do reduce growth. They bring up inflation. They do reduce growth significantly. We got to keep an eye on that. My sense is this administration will be pretty thoughtful about it, I think. And then the other is, listen, I just think we got to deal with the debt thing. If you took the discount rate significantly higher, if you took the cost of financing for companies significantly higher, that you dull cash flow generation because the cash flow gets stuck at the debt, like those are the risks, and that today is what I think is out there.
And you mentioned the tariffs could be a bit inflationary. I mean, a scenario you're talking about with bond vigilantes, et cetera, that also could be inflationary,
Totally.
Yes? So, I mean, but how do you figure out how do you sort of game it out and figure out the probabilities at this point?
So by the way, the bond vigilance, don't sort of inflation, but they certainly could press the rate up.
Right.
And so how do you assess that? And the way I think about it when we try and build balance in a portfolio is you think about, gosh, particularly today when volatility comes down, I'm the happiest person in the world because now I can run my equity portfolio and build a ton of downside into it. So that is one. Two, I love owning yield. And you don't have to go out the yield curve. I mean, credit, Marc talked about it. I've been doing credit for I've been doing credit for a really long time. I've never seen it. So post-COVID, companies term their debt out. They have no maturity wall, many of them. And you got a decent economy, good free cash flow, cash on hand for many companies. I just love owning yield, stay shorter on the yield curve, just keep clipping coupon in the front end. keep my interest rate exposure down, and you create balance in the portfolio.
Gosh, I just love Yahoo Finance Invest. I helped put this thing together. Now stay with us. We'll be right back with more after this break. Welcome back to our special edition of Opening Bid. We're bringing you the Yahoo Finance Invest 2024 Roundup in the form of an absolutely amazing investor guide. For this next half of the episode, we're focusing on sectors to watch. We're going to power through some hot takes on retail, healthcare, defense, and of course, a whole lot of AI across the board. First, you'll hear from Macy's chairman and CEO Tony Spring, interviewed by Yahoo Finance senior reporter Brooke DePalma, addressing how the election geopolitics will impact the future of retail. Second, Lux Capital general partner Deena Shakir spoke with Yahoo Finance's Madison Mills about tech and healthcare. And at the end of this episode, Anduril Industries co-founder and CEO Brian Schiff joined anchor Josh Lipton to analyze the future of the defense sector. All that coming at you right now.
I think post the election, retail is a great place for those that want to celebrate and those that want to escape. So we actually are a great place for people to come for what we call retail therapy, a chance for people to enjoy themselves. The holidays are coming. It's a perfect time of year where you're actually thinking about your family, your friends, your loved ones, as opposed to the geopolitical environment where you've got people who are, on opposite sides of the equation and not necessarily comfortable having conversations.
Now, did it help the fact that we had a decisive conclusion on who won Wednesday morning?
Yes.
Yeah. And are consumers seeking value in this sort of environment, or are they willing to splurge now that we got past that uncertainty?
I think you have different consumers looking for different things. One reason is why Macy's Inc. as a portfolio, Macy's, Bloomingdale's, and Bluemercury is such a powerful engine of retail is because we appeal to different types of consumers. There are those people that are looking for what's the latest fashion, what is newness, and that's very important to the Bloomingdale's business. It's also important to the Macy's business. We have consumers that are looking for great value. Value obviously is described by what I pay, but also the experience I have, how quickly it comes, how convenient it is, and Macy's leans into that very effectively. And then at Bluemercury, you have the benefit of obviously efficacy and skincare and local talent that is right in your community, so it's a convenient factor as well.
How do you take everything that you're learning at these stores and scale them out, and when will we see those scaled out?
Yeah, we'll make an announcement as a part of our fourth quarter earnings when we talk about guidance for 2025, but I think it's fair to say the ideal was not to have only 50 stores. So we will have more stores. We announced on the second quarter earnings call that we're expanding our tests in shoes and handbags to 100 more locations. That's additional staffing into those stores. And so far so good. Pleased again with the consumer response.
More staffing, more inventory, or a change of inventory rather. How expensive is this investment?
Look, I think it's up to us as a business to do two things. One, to provide the customer a reason to buy at Macy's, Bloomingdale's, and Bluemercury. That's our responsibility every single day. And the other is to allocate our investments so they get the proper return. Our job is not to spend more money and get less from the consumer. Our job is to spend the right money and be able to inspire the consumer to buy. So these are choices. So in my mind, we've underinvested in our stores. There are other places we have to be more efficient. Third component of Bold New Chapter is improving end-to-end operations, so that whether that's more automation, use of AI, the opportunity to allocate inventory more effectively, to be in stock at a size and color level, depending on where you're shopping. Those things are all important at driving the cost down in our operation.
Yeah, the fact that you've underinvested in the stores as of late is really interesting, because for those of you who don't know Tony, he is a true merchant, as I've heard from so many people. You started your career at Bloomingdale's overseeing a sales floor of 15 people. You've always been in customer service. Fun fact, you worked at Burger King in high school. People are not as optimistic as you are about the department store. So many have turned to e-commerce. What makes you so confident that this strategy will help make Macy's relevant?
I just want to take a step back and rephrase the term department store, because essentially if I told everyone that I had a business, that we could be in the cosmetics business, we could be in the women's apparel business, we could be in the men's business, we could be in the home business, we could be in the electronics business, you might call that a marketplace. And a marketplace is very attractive to people, because a marketplace is where I can go and find the things I want in the brands and the prices and the styles that I like. And I think a part of what we've not told as compelling a story with is that department store says it's fixed. You know, what we've allocated to apparel or allocated to men's, we can't change. crazy. We can absolutely change that. We could change the amount of inventory we have in those categories. We could change the amount of people we have in those categories. We could change the amount of advertising we dedicate to those categories. So what I love about department stores, and my love goes back 37 years now, is the fact that we can move to where the customer is going.
I can't believe that the options that women have for giving birth, they're still the same that my mom had, like epidural or natural. And my friends and I in the group chat are kind of baffled that there hasn't been some massive new evolution that we can look forward to, right? When is the AI goodness going to hit women's health?
I'm actually really excited about what's out there. There's a lot happening, but let's remember the actual percentage of dollars going into R&D in women's health is less than 2%. So as long as less than 2% of research money is going into this space, we're not going to see crazy breakthrough. Yeah. That is changing. You know, this past year, ARPA-H had this $100 million initiative to fund women's health research, real moonshots, just like they did, you know, with other sectors. We're seeing everything from investments in artificial womb technology, incredible advances on fertility tech, AI in particular being used. We have a company in our portfolio called A-Life, which is revolutionizing the way that embryos can be selected and optimized for that. Early detection of cancer, lots of advancements on that. Early detection of things like preeclampsia. As you know, I personally suffered a near-death experience with postpartum preeclampsia that couldn't have been predicted. And I've started to see some technologies that are actually looking into early detection of these types of diseases that can be deadly to women. So there is a lot out there. It just takes a longer time horizon, and it takes a lot more capital at the earliest stages. And at Lux, we love to invest at those early stages, and particularly in breakthrough science. And so we have the opportunity to invest in, you know, companies that are really just an idea and an incredible, you know, researcher, and turn that into a viable, durable business.
How did that experience that you mentioned, postpartum, and the health impact that you personally had, how did that impact how you look at investments, what you're looking for, and just your perspective on what's next?
Yeah. So I have 3 children, and my youngest is 14 months. So just over a year ago, I was just about a week postpartum, and I was at home already when I had the worst headache of my life. And truly, if this had happened with one of my other kids, I probably wouldn't have survived. But because I live and breathe women's health, somewhere in the back of my mind, I had registered if I have a headache, I should check my blood pressure. And I happened to have a cuff because I had this emergency kit that I bought during COVID. Turns out my blood pressure was off the charts. It was like 200/99. I didn't even know what that meant because I've never had high blood pressure. 3rd kid, never. And Maven Clinic saved my life. Literally, I was so fortunate to have the chief medical officer on speed dial. He triaged me. I quickly went back. By the time I was admitted to the emergency room, they told me if I had been 15 or 20 minutes later, I probably would have had a fatal seizure. And I was in the hospital for 5 days. So that experience really reminded me of why we do what we do. I shouldn't be so lucky that I happen to have, you know, this chief medical officer on speed dial. Technology and AI now should make it this accessible for every human being in this country to get access to information and care when they need it. And so, although it was the most terrifying, you know, health scare I've ever had, it really energized me into the kind of work that we do. And when it comes to AI in particular, it is being applied in more and more areas. We're just at the precipice now of beginning to see the implications. It's changing so rapidly, so quickly, and it's every company in our portfolio is applying it or building on it in ways that are revolutionary.
And it sounds like you see AI as a way of democratizing access to health so that someone who doesn't have the chief medical officer on speed dial has a fighting chance as well.
Absolutely, and everything else, right? Yeah. For clinicians to, you know, spend their time caring for patients and not doing administrative work. For researchers, we are looking at a company right now that's in the regulatory and compliance space for clinical trials. Doesn't sound like the sexiest topic, but making that process more efficient is going to be what leads us to these better breakthroughs down the road. So we're looking at all aspects of the healthcare industry.
We've been kind of involved in each wave of the AI pieces and figuring out the best ways to apply it to defense. So early on when we started computer vision, right? So how do I really start to get these things deployed onto every product we have? Like I recently did just like an inventory of like, we got a couple dozen products, and I was like, which ones don't have an NVIDIA GPU on it? It was actually Literally zero. Like all of them have NVIDIA GPUs, every single thing we do. So every single product we have has been infused with this idea of, how can we apply these AI models to just kind of transform this? So we kind of started out there, we're doing machine learning against radio signals. How do I really quickly classify everything I'm seeing? And then with this wave of, kind of the Gen AI stuff and all the LLMs, I think there is huge applicability, right? So the ability to comprehend vast amounts of information, to interpret that, to synthesize it, to interact with it in a much more human way, that is going to have massive benefits in the long run. Just the volume of information that the DoD has and being able to just supercharge every human to be able to access that information, that is going to be a massive unlock. So we're actively working with nearly all of the AI labs and trying to figure out how best can we pull them in to U.S. government work? How can we adapt what they're doing to national security problems? And then probably just as importantly, how do we get the DoD to understand the potential impact and scale of this? And that's actually the hardest challenge, to be honest, which is, again, it's based on this idea that you kind of start these seedling things out, but you controlled it all the way through this tech progress. A totally exogenous shock, like what has happened, I remember using ChatGPT. It was like, dude, this is alien technology. It just felt like nothing anyone had ever seen. We've normalized it already, right? We're like, oh yeah, chatbots, that's easy. Right. But that felt like alien tech. That exogenous shock to the DoD, and how do they deal with that? Man, that is not an easy thing to get a 3 million person bureaucracy around. And how do you start to absorb that? What does that imply for how you change your operations, the way you work, the way you think about this? So that is going to be the journey. It is, I think, going to be much more impactful, much more broad spectrum than they can possibly imagine right now.
And the question I have, maybe this is less business, more ethical, but how critical is it to keep a human being in the loop as you deploy AI in the war zone?
So this is where the U.S. has to take leadership, right? And I think the U.S. has to be the first adopter, and they have to be the best adopter of this, because we have to set the norms, we have to set the expectations, because the reality is the U.S. wants a position of human accountability, right? And I think that is good. We do not want, computers making life and death decisions. But the reality is it's a much more kind of complex and gray area. So the way we approach this is we really try to break down what is that point of accountability we really want the humans to have? How can we really use AI to get rid of those mechanical, repetitive aspects, where humans get fatigued, they make mistakes, they're actually not as optimal in that case. But what we want them to do is use of force, right? When is this justified? When does this make sense? When have we satisfied the rules of engagement? And the military has always had a very good system around this, right? A commander is responsible for what happens when they fire a weapon, right? At the end of it, doesn't matter if the weapon is, they are responsible for what happens when they fired a weapon. So we have torpedoes today. We have anti-radiation missiles that, you say, hey, in this box, if there's a thing that matches this signature, that's a legitimate military target, right? We've had those since the 70s. So the DoD actually has a framework around a lot of it. It's just then figuring out how this then best applies and how you can lever those humans to make those informed decisions and actually be more accountable because they have better information, because they can be more precise. And that's where I think the opportunity is. But the US has to set the norms on this. China and Russia are not going to do this. Russia is down for, anything that moves behind the front lines.
Special thanks to all of our Invest 2024 guests and the massive Yahoo Finance team that made it possible. Best people in the business. This is your latest episode of Opening Bid. Hit us with those likes, follows, and subscribe wherever you get your vodcasts.